Hey everybody, it's me, Gregory Mannarino. How are you today? It is Wednesday, August 1st, 2018. Alright people, so this is the one place that we need to be looking at right now. Forget about what's going on with Apple, because, well, we'll talk about that in a second, but the one place that you need to be looking at is, again, where? The bond market. Right now, as I am doing this video blog, the bond market is bleeding. I literally mean that. Go have a look at this. It's right on my website for you to have a look at. It's free. Right side of the page, underneath the chat room, there is a link in the description of this video. Again, you won't believe what you're seeing. An absolute reversal of what we happened to see yesterday. However, at the end of the day yesterday, and this slipped by me as well, bonds sold off big time. This is playing out again today. And how is this affecting the markets? Well, as I am doing this video blog, despite what happened with Apple, the stock market is fighting to find direction. As a matter of fact, the Dow Jones Industrial Average is negative. Again, as I'm doing this video blog, the NASDAQ is the only index, because of Apple, that is putting on any kind of a meaningful gain. I think it's a 0.36%. I mean, it's almost laughable, so nothing's going on here. But it's that bond market here. Look, the U.S. 10-year yield right now just touched 3%. Now, if you recall in the video that I did on Saturday, I explained to you that if this were to occur this week, my outlook moving forward through the week was going to turn bearish. Well, I'm going to have to say that's kind of where I am now, despite it doesn't matter what's going on here with one company. Look, you turn on the Confederacy of Dunces, they are fixated on Apple, and they want you to focus on Apple like a laser beam. It's one company among thousands. You understand? So, but no. Look over here. Look over here. Don't look over here. Don't look how the rest of the market isn't doing too much right now. As a matter of fact, don't look how the Dow Jones Industrial Average is negative right now. Don't look at how bonds are selling off. We have the Fed today as well. And a lot of you out here seem to believe that I'm going to be wrong. And look, I may very well be wrong that the Fed, I don't believe the Fed is going to raise rates today. The street doesn't believe it. I don't believe it. But could they do it? Of course they could. But I don't think they're going to. But let's put that aside. Let's say the Fed does not raise rates today, which is what I believe is going to happen. They are still going to paint a beautiful, rosy picture. Meanwhile, I want you to think about this. So we have a 10-year yield that just hit 3%. Well, we have a GDP print, which is 4.1%. How does that work? Do you see where I'm going with this? I believe you do. So let's keep an eye on that bond market today. If they get in here and they start buying up those bonds, start propping it up, stocks will move up. I'm pretty sure about that. Let's keep our eye on that. I also do not believe they're going to allow the 10-year yield to remain at 3 or above 3 very long, especially with the dollar here. Lately it's been gaining some strength. This is not a good combination. All right, we need a weaker dollar. They need a weaker dollar, and that 10-year yield more or less stuck in that sweet spot. It's kind of moving out of the range of the sweet spot. I'm not saying there's a line in the sand here, but we are at the upper range, or maybe moving out of that sweet spot here. They don't want this. Again, the illusion has to be kept real, and I believe the Fed is going to go into damage control today. Again, President Trump came out explaining how he wants the easy money to keep going. He wants to keep inflating the debt bubble so cash will flow into the stock market. The Fed was doing a reasonably good job at keeping the illusion real, so they're going to have to try to do that today. And the wording is going to affect the markets one way or the other. So let's keep an eye on that. That's 2 p.m. Eastern Standard Time. And I will talk about this all later at my market wrap-up. It's going to be just freaking lovely. See you then.